Bitcoin exchange-traded funds, or Bitcoin ETFs, are financial instruments that track the value of the world's leading digital currency, Bitcoin. They provide a way for traditional investors to gain exposure to Bitcoin without having to buy, store, or manage the digital asset directly. This section will introduce the concept, briefly explaining its significance and the role it plays in bridging conventional financial markets and the emerging cryptocurrency space. Bitcoin exchange-traded funds, or Bitcoin ETFs, are investment funds that are traded on traditional stock exchanges. They represent an ownership in a fund that holds Bitcoin or Bitcoin-related assets, allowing investors to gain exposure to Bitcoin's price movements without needing to directly buy or store the digital currency. Bitcoin ETFs work by tracking the price of Bitcoin through futures contracts, physical Bitcoin holdings, or a combination of both. This mechanism enables investors to benefit from the potential appreciation of Bitcoin while mitigating some of the complexities and risks associated with direct ownership of the cryptocurrency. Investing in Bitcoin ETFs offers several benefits, including easier access to Bitcoin for traditional investors, simplified management through custodial services, and increased liquidity from trading on established stock exchanges. However, there are also risks, such as market volatility, potential regulatory changes, and the possibility of significant price swings impacting the value of the ETF. Investors should weigh these factors carefully before adding Bitcoin ETFs to their portfolios. Investing in Bitcoin ETFs involves a series of steps that are similar to investing in traditional ETFs. First, investors should conduct thorough research to understand the specific Bitcoin ETF and its underlying assets. Next, open an account with a brokerage that offers access to Bitcoin ETFs. Once the account is set up and funded, search for the desired Bitcoin ETF using its ticker symbol and place a buy order through the brokerage platform. It is crucial to monitor the investment and stay informed about market trends and any regulatory changes that may affect the value of the ETF. The future of Bitcoin ETFs is closely tied to regulatory developments across the globe. Governments and financial regulators are increasingly focusing on how to integrate cryptocurrency investments into the broader financial system while ensuring market stability and investor protection. Emerging regulations may influence the growth and acceptance of Bitcoin ETFs, potentially paving the way for new financial products or imposing constraints that impact their availability. Investors should stay informed about regulatory changes and their implications to make educated decisions regarding Bitcoin ETF investments.